Folks, welcome to the big picture with Jeff Zunaneri and myself, Roger Scott. Today's just the perfect opportunity to talk about in light of what we're seeing in the market. Jeff, how are you doing today?
Hanging in there, man. Can't say I'm shocked, but never fun to see crashes like this.
Nah, this is a very nasty day. Just for those that don't know specifically what we're talking about, let's just kind of review. We had the CPI come out a couple hours ago. Actually, it was more than a couple hours ago. I don't know where the day has gone. It's already 11. It seems like 9 in the morning, but Um, most folks were what we were hoping to see is we were hoping to see that the core, the year over year on the core and the headline number was down. Well, both numbers were higher than expected, and most importantly, the core number, which is what the Fed looks at, was above the previous high, which puts us back at square one. So that's just kind of I just wanted to kind of give people a little preview of what we're the big thing to talk about. Jeff, what's your view of all this? Talk to me. Let me know your thoughts.
Listen, I've been saying this for a while. These guys aren't going to clamp out inflation easily. It's not going to just take care of itself. And when you make a mistake as dire as they did by leaving rates too low for too long, quantitative easing too low, too much buying mortgage bonds, buying all these bonds, 6 months after they identified that we already had 6% CPI, you get in this quagmire. You can't just snap your fingers and stop it. And so the market has taken this very, very badly, to say the least. The problem was we had a little bit of a downtick last month in CPI. So people were hoping that we wouldn't see bigger readings from that point on. Today, the reason the Nasdaq's down almost 4% and the S&P is down 3%. Today, we had an uptick in inflation from last month over month, and a big one. And so we've had gas come down for what, 8 straight weeks. And
Yeah.
the hope is that would just seep through, but it's not. Food's not coming down. Rent's not coming down. Wages not coming down. So rates keep going higher. Now we have the possibility of a 100 basis point cut at the next Fed meeting, which was never on the table before. And I just don't see, other than like quick short-term trades, how you can really be constructively bullish when the Fed is like going to be gung-ho on ripping rates higher, and we're heading into a recession, if not already there.
Yeah, I personally think we are in one already. I think we're in
Yeah.
the middle, smack in the middle of a mild recession that could worsen. But I think depending on where we go from here is the big question. Now, technically, it's a great session to have this with you today because it all happened just a few hours ago. So our timing is good. But I
Mm-hmm.
wanted to talk about that chart, that pesky chart that I keep bringing up every session we have, which, as you know, is the bond market. And I don't know why
Mm.
it's showing me an intraday chart where, oh, that's interesting. So that's kind of what we're looking at, and we are, as you can see here, we are breaking down. So my big concern is how is consumer stocks going to reflect that? And remember, we came up from this level, and I said if bonds break lower, I think we're going to go back into this zone here. Now, if you look at technology, right? For example, if you look at technology,
Yeah.
we're way in that zone right now. I mean,
Yeah.
we're at the bottom of that, smack middle of that zone right here,
Mm-hmm.
uh, right there. If you look at communication, we're already at the bottom of that zone, and
Yep.
and and ready to, as you could see right here. So the question is, do you believe the bond market is going to start pulling up? Do you think a lot of this is assimilated, or do you think the bond market's going to go further lower without taking a big break? And that's a very significant question because that, in my opinion, is going to dictate the movement of these sectors in the near term.
I think rates are going to go higher. I think
Yeah.
bonds are going lower. I think stocks are getting really, really ripe for some buying because they're 4%. Listen, 4% yields historically isn't Armageddon. Stocks are acting like 4% interest rates are like 17% interest rates. Now, if you get to like 5%, 6% interest rates and inflation is still growing at 8%, well, then you have a structural problem in your economy. I do not believe that to be the case. I believe we have a monetary problem. It's not a structural problem in the economy. We have a monetary problem that was created by the Fed, that was born out of a pandemic, which they in their defense, had no experience in dealing with, but they made a whole lot worse by using monetary tools as playing God. And so it's backfired big time. But people don't know, Roger. We're in this like, why are we still growing at 8.3% year over year? Why don't we just have, why are we having core at 6.3%? How is that still happening if oil's come off as hard as it has, if rates have already been brought up at the fastest pace in 25 years? How is it still happening is the question. And so I think the market is spooked, and I think everyone should be humble and saying, how serious are these guys in stopping inflation, and how bad will they let the stock market get before they just calm down? Because
I
they're
think
playing
really,
two masters.
I think that's really what you just said is ultimately the crux of the problem right there. Those are the two major issues. How
Yeah,
far will they let the market go? Because you and I both know that there's a lot of, I mean, they're supposed to, in theory, keep everything separate, politics and finances, but we all know that that has not been proven to be the case. But by a long shot, they're very,
no.
very, very interested in the stock market. They're very vested in the stock market, and as you and I both know, they're all very invested in the stock market. So one thing that is encouraging me here, one thing that is encouraging, and it's also kind of backing up what you just said that we're due for a bounce, is the fact that volatility is not really reacting how it should. If you look at the Dow and you look at the move we're seeing in the Dow's down almost 900 points. It's down 2.6%. You would think that the volatility would be a little stronger than that, but it doesn't
You
seem to
would.
be. It just doesn't seem. So that also kind of tells me that the market has priced in the majority of this volatility into its value. Um, One of the sectors that I'm really focused on right now, I looked at my stocks. I was looking at the strongest and the weakest stocks. And one of the sectors that I'm really focused on right now is the chip sector. I was looking at my CSI scan. I'll show you this so you can see exactly why I'm concerned about this. I was looking at the scan this morning, and one of the things that I do Tuesday is I pick the strongest and the weakest stocks. And one of the things that I noticed this morning when I was looking at the weakest stocks, I mean, look at this.
Excuse me, sorry.
Look at that in a row. I mean, it wasn't even this bad this morning. It's even worse now than it was this morning. AMD and
Unbelievable.
Cal. That's the three weak. These three stocks now are weaker than Hewlett Packard, than
But it's
Align.
so schizophrenic, right? Like
Yeah,
yesterday, everybody was buying Apple like it was the last day you could own Apple stock because everybody was going to get a new iPhone, and the Chinese site crashed because everybody's trying to buy an iPhone. And then today, we're in this like schizophrenic mode where everybody's like, oh, nobody's ever going to buy a new computer, sell all chip stocks, semis are going to zero. And it's just tough tape, man. Tough. But the trend is lower. These
yeah.
stocks are weak. And growth
But
stocks, like these consumer stocks, they're weak. They are weak.
but
They're trending
what
lower.
one thing I have noticed is that the chip sector as on its own has been deviating even worse than the entire technology sector in the last couple of weeks. That's
Yes, it
that's
has.
that's what I've noticed, and that's another. The reason why I'm bringing that up is not to say that tech is going down. The reason I'm bringing it up is because that's another sign of recession. Because remember, if global chip sales, if we have a major deceleration of the supply chain because of the recession, it's going to impact the chips directly. And there's been a lot of articles about that in the last couple of weeks. A lot of newspapers have been talking about that. So I'm kind of looking at that as well because chips usually are the first to really go down and first to come up. They're like a commodity. So do
Yeah.
you think? Are you seeing any interesting? Are you seeing any interesting plays? Because I know you like to do the pairs trades. So I'm curious if you have anything cooking up in the
Tech,
semiconductor division.
see the problem with like looking at like semi pair trade here. So I'm not. The answer is I'm not in this moment. And there's a reason. Because when the market becomes so unhinged like this and so emotionally charged and so binary, and by binary I mean everything is very bullish or everything is very bearish, the historical spread between two stocks tends to disappear because they just throw all the babies out with the bath water. Once that wave rolls over and things calm down, then you have the performance discrepancy. But while the market's being crashed, stocks like Intel and AMD, they're being sold the same, even though AMD's done a better execution, has better earnings, etc. In the shortest of terms, on a day like this, you will not get the performance disparity that you want. So to answer your question, I find it very difficult in this exact moment to put on a pair, a money link, intra-sector. Now, what I like to do in these moments is put on pairs between sectors, not intra-sectors. So long oil, short miners is something that I like right now because ETFs are going to give you just as much bang for your buck in this highly charged market as individual stocks. And they're not just indiscriminately selling all semis. You know what I'm saying? So then
And they're
it's just
not,
more.
and they're
Yeah,
not
go
as
ahead.
overvalued, and they're not as
Right,
overvalued premium wise.
right, right. So I don't know how bad. Like I've been playing AMD Intel Money Link for people that don't know at home for almost a year and a half now. AMD being the bullish leg, Intel being the bearish leg, and it's been an unbelievable trade. And I've gone in and out of it several times because of that. But in this exact moment, I don't see any edge in AMD outperforming on over the next couple of days if we were to remain bearish as we are right now. So that to answer your question, I can't do it intra sector in this environment.
All right. Well, let me ask you. Let me phrase this question. I'm going to get this answer from you one way or the other, Jeff. One way or the other, I'm going to get it out of you
I
today.
gave you an answer. You might not have
No,
liked it,
no,
but
no.
it was the
I'm
answer that I had for you.
no. I'm trying to get a free trade for our readers out of you today. So
Right.
I'm just playing around and saying one way or the other, I'll get it out of you. All right. Well, forget the pairs trade.
Right.
Is there anything that you would take advantage of in this crazy market with the Dow being down in
Let's
these
look at
levels?
levels. Yeah, look
Yeah.
at levels. I mean, there are places I would buy. Definitely. Definitely. I think the NASDAQ gets really interesting. Another 3% lower from here. It could do that today. I mean, we're filming it in the morning. Like we're
Yes.
kind of in we're kind of in a crash mode right now with the NASDAQ down 4%. So 4%, 6%, you're splitting hairs once the momentum train gets rolling. But if we're looking at a place to buy it, I think it gets really, really interesting down here. Another 3%. Yeah, exactly. Where you're pointing at, where it's based out before.
Yeah. Yeah, the channel, the bottom of that channel. I still think we're going to remain within this channel. So I'm
Yeah, so
kind of
do I.
also,
So
yeah,
do I.
and look, I mean, look at the Dow Jones right now. I'm personally right now looking at some bargains. I'm looking for stocks that are coming. What I do, let me just tell you what I do in these environments.
Yeah.
Here's the trick that I've been using that's been working really, really well for me is when I see markets really selling off this fast. And this strategy I've been using specifically in the alpha rotation top stock, and I'm literally giving it away right now, and it's been working great. Is I'll go to my S&P relative strength scan, the CSI scan, and I'll look at I'll organize the stocks by strength, and I'll start looking at the strongest stocks, literally the strongest stocks for the market, and I start looking at their levels, and I'm
Yeah.
starting to look for very minor pullbacks, very very minor pullbacks, and
Yeah.
that's been serving me really really well because you got to figure if these stocks are so good that they're able to withstand what we're seeing right now, then they should do pretty well once we come back from that. So that's what I've been doing. So right now, after we're going to be done with this call, I'm going to come up here and I'm going to be looking for some opportunities on stocks that look like they could be.
I
Uh,
like a few of these names that you have up here already. For sure,
yeah,
Oxy. For sure.
Oxy. There's another couple of good ones here as far as energy stocks are concerned. I saw Kanako here. You got this was the number one stock up to a few days ago, and utilities is the strongest sector. I'm really loving this stock right now. I'm very bullish on this stock. So
Yep.
like Sigma right now, but that's how I love to play these outsized pullback opportunities
Always.
away
Always.
from.
I agree. I agree.
uh,
But I definitely think that there's such institutional selling today, Roger, that's happening
yeah.
that if you see something that's up or something, there's like a massive chance that it's going to be down as much as the index by the end of the day.
Oh,
Because
I
the
agree.
way index like arbitrage people work, and I used to work with these kind of people in banks, is they just look at these stocks that are sticking out in the shortest of term. I'm not talking about long term, in the shortest of term. And they say, why is this stock up 0.5% when the market's down 3%? Short, 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 short. Let's see. They start really testing the buyers to see how committed they are. And in this type of environment, what tends to happen is traders look at what they're green in, and this is perverse. It's stupid in the shortest run. You should be doing what you're doing for longer term stuff. They look at, what do I still have some profits in? Let me sell that before it turns into a loser. And invariably, they turn it into a loser by doing that.
Of course, of course. Yeah, that's definitely not the direction that you guys want to go in. And yeah, that's very true. Let me ask you
Self-fulfilling.
this.
Yeah.
Are there any particular, while we talk about this, I'll just go to the sectors. I know that obviously your advice would be similar to mine, to be a little defensive right now. You've got
Have to be.
utilities, you got to
Yeah.
be. Are there, out of the 11 major sectors, is there anything in particular, any one or two that you're gung ho on? Are you still liking energies, utilities, consumer staples?
Yeah, I'm
Last time we talked,
defensive. Energy and
yeah,
utility, the same thing. I'm defensive. I'm skeptical. I'll flip around some tech on some quick stuff, on some quick hits, but those charts are broken. Those stocks, they pop 5%, and they go down the next day 8%. Look at Facebook. Bring Facebook up. This is a
let's take a look.
Meta,
Let's do it.
META. This is a perfect example of like thinking you made a bottom and then like not so fast, my friend.
Yep.
Look at this stock over the
Yep.
past. Look at like, do it like 1 month. Do like a 1 month just to show people how you see how it's like rallied. Looks like it bottomed, and then bang, you gap down, and then you're testing all these new buyers, like, and seeing how serious they are in love with this company. Like, that's what happens when you try to bottom fish these names in broken stocks.
Yeah, and again, it's very correlated. Meta is one of the biggest stocks. A lot of people don't realize this, but Meta is actually one of the biggest stocks in the communication service sector. It's the name communication service sector is a little misleading.
Right.
You know, if you look,
Internet is all included in there.
yeah. So if you look at the constituents, look, you got Meta's the 18%, and then you got Google, Netflix. I mean, you got, look at these three alone right here, and then you got a
What
little
an
Disney.
outsized representation.
Right, right. But you got to look at it. Otherwise, otherwise it's no good.
I have a Google long, Meta short, money link.
Oh,
And
okay.
in this situation, it's out, Google's outperforming by a little bit, but those trades make me feel okay because, they're designed to work in all kinds of conditions. I have puts. So I'm favoring situations. I'm favoring strategies where you're hitting quick, where you're always looking at bearish opportunities too. You don't get too comfortable, complacent on the long side quite yet. There will be an opportunity for that. The time has not come. Just my point of view. I think on days like this, Roger, I like to talk tactics. Tactics are important because I think our viewers get the favorite pick of every person under the sun on TV saying they love this stock at 100, and now that it's 30, they super love it. So try to offer them something a little bit different in terms of like what they're going to do to survive the coming weeks, the coming months, because I don't see the harsh moves subsiding anytime soon. I do
No,
not.
no. And and that's why I think it's very, very important for traders to stick with these defensive sectors. And we've been saying that for quite some time, that you don't every time the market has like 3, 4 good days, you start getting these prima bulls up. Market's changing, market switching course. I mean, you remember 3 weeks ago, if you turned on CNBC when we had that nice little bounce from the downside, it was like it was it. It was like it was all over. And it's like, folks, people, this is not the end. This could be, we're smack in the middle of all of this. So I do agree with you on that.
Yeah. I think the Fed, when is the Fed meeting? That's coming soon, right? It's
20, I think they're meeting on the 20th or 22nd, something like
next
that.
week. It's next week,
Yeah,
right?
next week. Yes, definitely next week.
That's a possible massive catalyst, because if people are starting to say 100, then 75 basis points becomes a dream come true. So what used to be the nightmare situation becomes acceptable and priced in. You see what I'm saying? So
Very much
I don't
so.
think they're going to do 100. I don't think
No.
they're going to do 100 because that would be A, extreme, B, they've been telegraphing what they're going to do. So let's just keep it calm, keep it on the up and up. They do 75. I think that could be a massive buy situation for stocks and a sell-off in bonds short term, or in rates. Bonds go up too. But
Well, to put a little color on what you just said, before today's announcement, just a few hours ago, the implied bond price told us that the chance, based on the price of the asset, of 100% of 100 point, one handle base hike is roughly at 18 to 19%. Don't quote me on the exact number. I don't remember. But it was between 18 and 19%. 0.75 was around 79, 81%, around there. I'm going to check. I can't do it right now, but I'll check to see what the difference is. I know you have it on your Bloomberg as well, but it'll be very interesting to see how much that has changed since the morning announcement. If I had to guess, I would bet that we're near the high 30% right now. High 30.
I would
low,
agree.
like
It's
doubled.
probably way too. It's probably, in my opinion, incorrect and overly done, too.
Yes. Well, yeah, that's usually what you see right after,
Yeah.
right after these moves. Yeah, but if I had to bet right now, it's probably, based on everything I know, it's probably right around 36%.
I'll tell you what, though, if kids didn't have popcorn made for CPI, that's the number you got to watch every month, like the Super Bowl.
Yeah,
Because
especially
whatever they
especially right
do,
now.
yeah, especially right now, it's
Yeah.
gonna be like a massive move up and down every time it comes out, because it's the only thing that people are really wondering if they can do anything, like if they're effective at all in what they're doing.
Yeah, and the thing is, you got to take that with a grain of salt because you have a delay built into it. You've got a couple of months of delay into it, and
Yeah.
you've got so many other things going on right now. You still have the war in Ukraine.
But the reaction to it has been immense.
Yeah.
It was a big up day last time when it came in tepid. So either way, it's appointment viewing for markets, and it's something just tactically people should clean up their books a little bit around and have some cash, because there's going to be trades to do.
Definitely.
Don't just sit and have hedges on too into it one way or another.
Do you think the PPI, in light of what we saw today, do you think there's going to be a lot of significance from the PPI, or do you think the cat is out of the bag already, so to speak, coming into retail sales? And I mean,
I think the cat's out of the bag. I think PPI is lagging. I think, speaking of lagging, I think PPI lags the CPI a little. I mean,
it does. It does.
So we'll see.
It does.
We'll see. But the market could be looking for something positive to hang. So I'm thinking to myself now, I like to always think, okay, so what would be like a little bit of a black swan, unexpected positive catalyst? We need a positive catalyst, right? There's enough doom and gloom. What would flip the script, at least for a little while, for a few days, right?
That's a good question. And I'm, the further we get along, I was going to say it could be the CPI, but not anymore. I'm thinking maybe retail sales, possibly retail sales could be good.
Possibly retail sales.
Consumer sentiment on Friday, but by the time we get to consumer sentiment, all the good stuff is out. Maybe the only thing that I'm seeing is the industrial production, retail sales, and jobless is going to be a nothing burger because it hasn't been.
I think the actual Fed will come out. They'll leak it maybe through the Wall Street Journal. They've been leaking their information a lot, saying we're committed to the path we've been on, which would be 75 basis points next week. So that could be a catalyst. They leak these things out.
That would
taking that 100 out. Take that
out of the equation.
Yes. Take that out.
Yeah.
So go ahead.
And I think retail sales could potentially reinforce that as well. Also, I think and one of the topics we haven't talked about, one of your favorite topics, China, obviously. I think we need to start also focusing on China because things are getting worse, not better over there.
People are going to think I'm like xenophobic against China. I'm not. It's just that regime is crazy. They do wild stuff, and they've been not friendly to their own companies. They've been not friendly to American companies from time to time. So for me, and they're locking up their city still in 2022. They still have a zero COVID policy. So let me ask you this: if you have a zero COVID policy, do you think you ever can eradicate COVID?
No.
You think it could ever work?
No, it's not realistic. Of course not. It doesn't make any sense.
So what are they doing? You have to ask yourself, what are they doing? Why?
I have no idea what they're doing. I got no idea what they're doing. I don't think they have any idea what they're doing at this point.
They're keeping a firm grip on control.
They're going around in a circle and controlling. Yeah, they're going around in a circle and barking at their people. That's what it seems like to me.
They're putting people under their thumb.
That's
keeping
right.
Control.
That's
that's the only thing I can read out of it.
Yeah. I'm going to tell you something. I got a survey yesterday from Deutsche Bank. They did a survey yesterday before this report, and the report actually was talking about the 10-year, and they were talking about looking at rates. 73% of those surveyed think the 10-year treasury yield will hit 5% before it hits 1%. Do you agree with that?
100%. Yeah,
Yeah.
that's like 1% might never happen again. For people, or not never, but unless we go into a deep, deep, deep bad economy. You don't want to see 1%.
Do
You
you
don't want to
also
see it.
No, no, you don't. You definitely don't. Also, do you believe that that there's an increased rate at this point that a recession will hit in 2023, or do you think that we still have a chance of seeing a real recession in 2022, or do you think it's pushed forward a little bit based on what we've been seeing lately?
I think the recession starts to hit this year. I mean, like you're seeing every day new companies announcing layoffs. Layoffs mean recession.
Yeah.
Companies don't, fire into strong strength and strong periods of time. Historically, the winter, the holidays, the new year, those are hiring periods. It's not firing periods. And companies are laying people off into those periods of time, which should historically be strong. And
And
so that's a,
and
that's a, that's a canary in the coal mine for me.
and not only that, just to add to what you're saying, we're seeing a lot of that from companies who've been doing really well and are very positive, like Tesla, for example.
Yeah.
Companies that have been really heating things up. Amazon, Tesla. Those are not the companies you want to see firings. And those companies are like the last ones to fire.
So
So
yes, recession. Yes.
yeah,
100% recession.
yeah.
Like,
I think so. My whole question now is whether it's going to come first half of whether it's going to come before New Year's or not. And I think we're going to see. I think midterms will. It's
I don't
very.
know. I mean, it's such a hard thing to like. People are
Yeah.
arguing so much about they don't kind of ring a bell when it happens. Already kind of feels like it. It's like
It does. It does. It
there's
does.
not going to be like a public announcement. Definitely not out of the White House. They're not going to go
And
out there
definitely
with a
not out of
megaphone.
and probably not out of Mr. I'll tell you the truth, not till I get reappointed Powell. It's very hard to read that guy
Yeah.
for all the
So you're
wrong
not
reasons.
going to hear it from anyone. They're going to probably be, if anything, telling you how cheap Thanksgiving is historically. Like you should eat your shoe, or everybody should have Oscar Mayer bologna sandwiches instead of turkey, and it's just going to be just perfect and
Jeff, I
cheaper than
went
ever.
Jeff, I went to Publix for the first time. My wife deals with all that stuff, but
Lucky you.
Instacart,
I'm
whatnot.
there
But
all the time.
I went to Publix for the first time yesterday in 8 months. I had to pick up a prescription, and I was waiting for the prescription, and I was just walking around waiting, wasting time, and I happened to be near the meat aisle, and I
Oof.
literally fell off. I literally almost fell down when I saw the price. I mean, you're paying prices in the supermarket that you were paying in restaurants for food 2 years ago. It was just crazy prices. seven
That's
dollars
what's
for
sticky. That's what's sticky. That's the part of inflation that doesn't just roll back. Like gas rolls back. That doesn't.
Yeah, or it takes a very long time, and it's that yeah. Most of that just stays where it is. It doesn't go backwards. Like technology, it doesn't go backwards.
Like what
Listen,
people
Jeff.
earn. Like what people
Yeah,
earn.
yeah, very much so. Jeff, another wonderful session. I really appreciate the insight. It was a really good timing that we had this session today, right following the CPI. I think people have a much better idea of where we stand, what to look for, the important levels, and the sectors. I think we covered a lot of ground. Folks, if you want to reach out to me, please do support at marketgeeks.com. Jeff's email is jeff@joyofthetrade.com. Please feel free to reach out to us and post comments below these videos if you're watching on YouTube, and also subscribe to these videos. We love what we do, and we love educating you guys and giving you guys some tactical ways to trade the market that you might have not seen before. Jeff, thank you again. I really appreciate your time, and I will see you later in the week.
Thanks,
Bye.
Roger. Have a
Thanks,
great
buddy.
week.
Bye,
See ya.
guys.